to really understand. Then what is a controlled transaction? A controlled transaction is a transaction that happens between associated enterprise, between related entities, because it's controlled in the sense that they can decide to tweak it the way they want, and that's why it's called a controlled transaction. And what is an uncontrolled transaction? An uncontrolled transaction is a transaction that happens, that is not with related entities, right? You can use the word independent, for that. We're going to be looking more on this. Now, the arm's length principle, which is the main rule of TP, what does it say? It says transaction between associated enterprises should be priced at a level similar to transaction between non-associated enterprises. That is what it says. That's the arm's length principles. And now we need to know what are the sources. What are the sources of this arm's length principle? Now, arm's length principle derives from two main sources, one, I call it the hard law from my own explanation, and the other one, I call it the soft law. What is the hard law? The hard law are legal obligations that are binding and can be legally enforced. And these are the law of the land, our own local legislation, because it is formal. And if you do not follow it, of course, there will be appropriate sanctions for non-compliance on this law. But what are soft law? Soft law are agreements, they are principles, declarations that are not legally binding. And they actually play a more important role than the hard law in transfer pricing. What do I mean? What I mean is that, you see, because transfer pricing now is a transaction that we call something that happens cross-border. Because it happens cross-border, right? We have two domestic laws involved here if we are talking about between two different countries. Now, these the domestic laws are different. Now, so if we want to relate on a particular transaction that has happened cross-border, are we going to be using domestic law in country A, or are we going to be using domestic law in country B? So because this has caused a lot of dispute over the years when cross-border transactions happen, that is why some bodies have come up with guidelines. They are not law, but they are guidelines that guides steps to be taken when cross-border transaction happens. And these are principles that are globally accepted. And what has happened is that a lot of countries, they have now domesticated most of these principles into their local legislation so that they can legislate on them when transactions happen between entities. Now, what is the legal framework of transfer pricing in Nigeria? The legal framework are the income tax transfer pricing regulation of 2018. In fact, the initial one was in 2012 before this updated one came up in 2018. We have the company income tax 2004 as amended. We have the personal income tax 2004 as amended. Various finance acts that amend most of these other acts that I've just mentioned. Article 9 of the Nigerian Double Tax Treaty, Capital Gains Tax Act of 2004, as well as the value added tax. Now, why is transfer pricing audit important? Why is it important? It is important because transfer pricing is one of the ways that MNEs, right, have illicit fund flows out of developing countries, majorly. And what do I mean by this? What do I mean by illicit fund flow? These multinational enterprises, a number of them, what they do, because they understand the tax legislation very well, and they see a lot of loopholes in the tax legislation, so they are able to position themselves to work around the loopholes to be able to use it to their advantage. So when we're talking about transfer pricing, you find out that transfer pricing, the word transfer pricing encourages shifting of profit by multinational enterprises to lower tax jurisdiction. I'm sure some of us will be wondering, what do you mean by what you just said, that it's encouraging shifting of profit? I'm going to do an illustration so that we'll be able to have a synoptic overview of what I've just said now. Now, look at this illustration. This illustration will explain why the Internal Revenue Service in various countries are interested in transfer pricing audit, and they are interested in the transfer pricing, the global transfer pricing regulation to settle that tax dispute. Now, look at this. We have independent grower and packaging producer, right, who sells, let's say, for example, we're talking about juice. So who sells oranges and whatever to Juice Company? Juice Co. is a principal and a parent company, right, who has Distribution Co. as a subsidiary. Distribution Co. eventually also sells to third party. Now, let us look at this now. If you look at this line that I have here between Juice Co. and Distribution Co., Juice Co. is in country A, while Distribution Co. is in country B. Now, if you now look at it, Juice Co. buys the products, the raw materials from the independent grower, and that what he buys from the independent grower, let's assume it's worth $10,000. Now, that $10,000 is the cost of goods that he buys those things. Now, what happens is that what he has bought from independent grower, don't forget, is a manufacturing company. He manufactures, he puts all his things that he needed to do, ingredients and everything. Then it comes out as a juice, packed juice, that he now decides to send to Distribution Co. that is in a different tax jurisdiction. Now, he sells these products to Distribution Co. at $15,000. Because Juice Co. is the parent company, Distribution Co. is a subsidiary. That price of $15,000 that Juice Co. has sold product to Distribution Co. is called the transfer price. So now that transfer price becomes sales to Juice Co. Now, because it is being sold to Distribution Co., don't forget that Distribution Co. too is still selling to the third party. So that $15,000 becomes the cost of goods sold to Distribution Co. And that you can see there under Distribution Co. Now, Distribution Co. now sells this product to the final third party market at $18,250. Now, where am I going? And what point am I trying to bring out here? Now, the point I'm trying to bring out here is, hold on a second, because I need to take this thing off. See, oops. Okay, so what the point I'm trying to bring out here is that now look at it that Juice Co. has an OPEX of 500, while Distribution Co. has an OPEX of 1,250. Now, Juice Co. tax rate in country A is 25%. Country B is 10%. Now, you find out that the tax paid in country A is 1,125, while in country B that has an OPEX of whatever, that's about 200. I can't see this very well because of this whatever. It's about 200. Now, you can see the profit after tax. Now, why is transfer pricing important? Because country A is in a high tax jurisdiction, while country B is in a low tax jurisdiction. Don't forget that the two companies, they belong to a group, and if they're going to be preparing group account, they want the group profit to be high. So if the group profit, they want the group profit to be high, they can subject the transaction between them to manipulation. And that's why I said try 11,000 as against the amount that they're saying they're transferring to Distribution Co. of 15,000. Juice Co. can say the transfer price is 11,000, and I'm going to show you the impact in a minute. Just a second, please. I'll show you the impact in a minute. So if the amount changes to 11,000, now you can see here that the profit after tax. So I'm going to show you the impact in a minute. Now, this 15,000 changes to 11,000. And this one too So can we see the impact now? Can we see the impact? So can we see the impact? Now you can see that the group's profit now is now about 5,775 as against what they had before. Look at this. The PAT for country A is now 375. They have shifted the profit in country A to country B, where the tax rate is low. So what is the meaning of this? The meaning of this is that if this happens, they have shortchanged the tax authority in country A. So that is why the tax authority in country A will be interested in carrying out a transfer pricing audit on country A to ensure that the price at which they transfer those goods was done at arm's length. Sorry, let me just go to the right. So I hope that is clear. So that explains why. So now we talk about TP compliance. In talking about TP compliance, now before the BEPS project, wherein the action point 13 came on board, what used to happen before? What used to happen in terms of transfer pricing document compliance was like there was transfer pricing disclosure form, and there was documentation in the local file. It wasn't well defined what was happening. Each country has different standards, different format, and different requirements for filing for transfer pricing. Also, there was lack of coordination, and there were gaps in many of these countries. But with the advent of BEPS Action Point 13, sorry, that shouldn't be article, BEPS Action Point 13, you find out that, it brought standardization to TP in the sense that the disclosure form still remains, but now we are now mandated to have what you call the tiered documentation, which is the local file, the master file, and the country by country reporting. And what does this do? There's convergence of standards and requirements, there's coordinated rules, and there's full global picture of the MNEs. So what are the TP compliance requirements? TP compliance requirements in Nigeria. Sorry, I couldn't get. Hold on, please.
Can you help us put it on presentation mode? So
Okay, hold on.
Yeah.
Hold on. I have this thing.
Why
that
Prof.
is showing.
Webos deal with the distraction? No, forget the scratching. Somebody is trying to scratch the screen, but you can continue at presentation mode. We'll deal with that from the back end. Yeah.
Okay. Okay. Hold on, please. I'm trying to get to the presentation mode because my screen is being covered. Okay, yeah, it's covered with. Okay, yeah. Okay, fine. I'll send it.
Okay.
Okay. I hope this is better now.
Yes, it's okay. It's okay. Thank you.
Okay. So now we have the TP compliance requirements in Nigeria. Number one, to prepare contemporaneous TP documentation. Somebody will say, what is this Oyinbo grammatical? What is contemporaneous? What contemporaneous documentation means is the documentation and information that taxpayers have relied upon to determine the transfer price prior to or at the time of undertaking an intercompany transaction. That is what contemporaneous transfer pricing documentation is. Then secondly, you have the completion of filing of TP declaration and TP documentation. Then you have the TP disclosure form. Then you have the TP policy document, which is filed along with the first TP returns filed with the Federal Inland Revenue Service. Now, you see, the BEPS Action Point 13 that has given the tiered way of filing return, TP returns, talked about the local file, the master file, and the country by country reporting. Now, what are the things that what was the content of the local file? What's the local file for? Right? The local file is prepared locally on legal entity basis. What do I mean by this? Now, don't forget that a subsidiary that operates in Nigeria, for example, that has its parent company in Brazil or United States of America, is required to have a local file. Now, the local file is that subsidiary is seen as a legal entity on its own. And there are certain documentation requirements of transactions that he does in Nigeria that is required. So that's why they say it's prepared locally on legal entity basis. And normally, globally, transfer price, this documentation requirement for TP is on a prepare and maintain basis. What does that mean? Unlike TP, unlike tax returns that we file on an annual basis, for this particular one on TP, you prepare it and maintain it down, waiting for the tax authority to ask for it, so that when they ask for it, within a specified time frame, you are able to give them that documentation. But if you have to wait for them to ask you for it, and you now start preparing it, you'll find out that you will not be able to meet up with the deadline that they will have given to prepare. So that's why I said it's usually on a prepare and maintain basis, and it is filed only on request. Then what is also in this TP file? It provides detailed information about related party transaction, the TP methodology applied, comparability analysis. On this comparability analysis, we're still going to be talking about some things on comparability. I will explain that as well. And why is this so? Because it seeks to collect income tax details and information on local economic activity as it relates to that subsidiary within that place. And what is this trying to do? It is trying to demonstrate that an entity complies with the arm's length principle. The arm's length principle is the pivot of transfer pricing, because they want to see that price that they have transacted is the same price that should have been the price if they are dealt with an independent entity. So that's the arm's length pricing. Then what are the contents of the transfer pricing local file? These are these that we have on the screen. I won't be dealing much on it because of time. Now, we'll look at the management structure of the local entity, the key competitors of the local entity, financial information of the local entity, the details of intercompany transactions, along with the TP policy. They're looking at the detailed analysis, detailed functional analysis performed, risk assumed, and assets utilized by the local entity, detailed description of the business and business strategies pursued by the local entity, along with the function performed by the counterparties. And the function performed by the counterparties, why this is necessary because of comparability analysis. We're going to be talking about this. And you'll be looking at the economic analysis as well, which is the selection of the TP methodology. Now, you see, because the time allotted to us cannot do justice to this paper, because we want to see why are we so particular about the selection of TP methodology? Because the selection of TP methodology can change what the TP adjustment will be. Right. So, and it should be such that the most appropriate TP method is actually selected, when you have certain intercompany transactions. Then we'll look at the master file, the TP master file. What are the things that are expected to be in the TP master file? You have the group organizational structure, the group's intangible along with its TP policies. You have the group's businesses. Then you have the group's financial activities along with its TP policies. Those are the things that are supposed to be in the master file. And again, the master file, the TP master file, I need to let us know that the master file is not to be prepared by the subsidiary in the local entity. The master file will be prepared by the parent company, and the parent company will share that with the local subsidiary. So it's not something that is the responsibility of the subsidiary to prepare. Then the country by country report. This is prepared and filed globally by an NMA's parent company. So it is filed, and once it is filed, it provides quantitative and quantitative financial and tax data information by, segregated into various tax jurisdiction. Now, you find out that who will prepare this. It is actually prepared by the parent company. And when it's prepared by the parent company, don't forget there's automatic exchange of information between countries that are subscribed into these OECD guidelines and member countries. So they're able to exchange this information freely amongst them. So it's not the responsibility of the subsidiary to ensure that this is done. Then we talk about TP methods, because there's no way you won't talk about TP audits without understanding the various TP methods. For the want of time, I won't be able to deal, extensively with the TP methods. But what I'm going to tell you is that the TP methods that you have seen on the screen here, these are the TP methods that are approved and globally accepted by all member countries of OECD and even the United Nations. And what are they? You have what we call the traditional methods and the transactional profit split methods. Now, these combined together are the 5 that you have here. You have the comparable uncontrolled price method. You have the resale price method. You have the cost plus method. You have the transactional net margin method, and you have the transactional profit split method. You see, each of these methods, they have where and when you can actually use them. And in using them, it's not cast in iron that this is the method that will be used for this particular transaction. There are certain things that needs to be done to know which method we fit into a particular intercompany transaction. Yeah, so we talk about comparability factors. Now, you see, you can't divorce comparability factors from arm's length principle. What is comparability factor trying to do? Now, what comparability factor is trying to do is, I'm going to explain it in a very simple way. What is there is that a subsidiary and a parent company, or a subsidiary and a subsidiary, they have carried out transactions between and among themselves, and they have come up with the position that, okay, this is the amount, this is the transfer price on this particular good or service that we have exchanged by ourselves. Don't forget, they could have an ulterior motive in determining how that transfer price is determined. It could be for them to have tax advantage, whereas the tax authority wants to ensure that whatever is due to them comes to them. So when that transaction happens between subsidiary companies, what the tax authority will do is that when they now look at the circumstance of the case, they need to find out transactions that has happened between either independent enterprise or independent companies, or the same subsidiary and another independent enterprise, to be able to determine what the proper transfer price should be. Now, and in doing this, for them to get to that level, a lot of things have got to be the same. If not the same, it should be such that even if they differ, there should be a way to be able to adjust the price so that it will bring them to comparable levels. And what are the things that you need to look at? These are the comparability factors. We want to look at the characteristics of the product or service. You want to look at the contractual terms, because the contractual terms between the two entities that are doing the controlled transaction must be almost similar with the transaction between uncontrolled transaction for the tax authority to be able to make those transactions to be comparable. Then you need to look at the business strategy that is adopted. You want to look at the functional analysis. And when you're looking at functional analysis, here you are looking at the functions performed by each of these entities that are involved. You want to look at the asset, the asset that is used in carrying out this intercompany transaction, and you want to look at the risks that is assumed by each one of them to be able to come up with a position on the comparability of that particular transaction. Also, you want to look at the economic circumstances that is involved, so that you are able to compare apple with apple. That is what you're trying to do here. Now, what is the tax audit process? The transfer pricing audit process. What I have done is that I have looked at. I have not only domesticated this. What I've looked at is I've tried to look at the process, the TP audit process in sub-Saharan African countries, and that is why I have now come with this 6 assessment. I can tell you this process. Everything that I have here is embedded in 1 or 2 things in different jurisdictions. Is already embedded in one of the things that I have here. One, the tax transfer pricing audit process starts with a transfer pricing audit notification. Now, what happens for that a tax authority will give you in a TP audit notification? There must have been some triggers. What are the triggers that you can have? Some of the triggers are transaction with related entities in countries with lower or effective marginal tax rates, or you have transaction with centralized supply chain procurement entities in tax jurisdiction with tax rate, or you have transaction with related parties in jurisdiction with aggressive or strict transfer pricing, or you have entities that have been declaring poor performance and consistent losses over time, or you have poor or non-existing transfer pricing documentation to the tax authority. So these are triggers by the tax authority to issue a TP audit notification to anybody. Now, with that, after the TP audit notification, of course, there will be TP documentation requirements, right? Also, there'll be fact-finding and information requests. And the information requests will be the tax authorities requesting that, on the basis of the intercompany transactions that have happened, we need this particular documentation and information so as to be able to do justice and to be able to see whether there will be a transfer pricing adjustment to the intercompany transaction that has happened. And after all doing that, of course, there'll be initial assessment. And when they do the initial assessment, of course, they're going to notify you. Then there'll be taxpayers' response to initial assessment. And here, once they sit down, and there'll be final assessment. Ladies and gentlemen, let me let you know that what I've just said now, that I've said in less than 30 seconds, sometimes this thing can take up to 1 year, 2 years, because there's always back and forth, in terms of arguing things and, getting to even get comparable document or information, because there will be arguing back and forth. We'll talk about TP declaration obligation. It said each connected person must prepare documentation containing information and data that may be required by FIRS in verifying whether the control transaction of that person was consistent with the arm's length principle. Then each connected person shall disclose all control transactions to which it is a party within the earliest of 18 months from the date of its incorporation or 6 months after the end of the accounting year. Now, why do we need to ensure that, okay, there's compliance as professionals? Because in terms of TP audit and TP adjustment, most often times we might not really have major issues. We might have more issue with TP compliance, and the TP compliance come with very stiff penalties. Now, with FIRS, what I have on board are some of the penalties that we have when you do not meet up with the compliance requirement on TP. Filing of transfer pricing disclosure form alone. If you fail to file the form, there's a prescribed format in which the form is. If you fail to do that, there's a penalty of 10 million or 1% of the value of control transaction not disclosed. So, and penalty of 10,000 naira for every day in which the failure continues. And where the control transactions are being collectively disclosed, there's an administrative penalty of 10 million as well. Then, filing of transfer pricing declaration form, 10 million again for every day in which failure continues. So you see, you don't want to go there, because if you do not fulfill the obligation, then your clients will be paying still penalties. And these are easy and simple things that you can just do. But because a lot of us do not know, our clients fall into this pitfall, and they get into that problem. So what are the things that an accountant should do before, during, and after the phase of the audit? You assess current facts by reviewing of intercompany agreement, comparison of actual practice and legal agreement, understanding of transfer pricing structure, operating changes that may have occurred during the tax year, and prior audit position. Then you outline the options and approaches. These steps involve outlining the various potential options and approaches that can be taken to support transfer pricing results for the tax year. The steps that will be taken to analyze each approach or analysis, the estimated outcome, and the benefit or risk in selecting a particular one here. Then we'll talk about the practical support of intercompany, intercompany pricing decisions. We talk about benchmarking. Benchmarking is another area that takes a whole lot of time to be able to explain. Then we talk about the tested party cost segmentation and treatment of external costs, year-end transfer pricing adjustment if necessary, revision to legal agreement if necessary. Then you outline the steps to bridge tentative comparative result with final updated result for documentation. Then the audit readiness. Prepare your contemporaneous memorandum that outlines the rationale for transfer pricing approaches, including changes to agreement and adjustment to comparability if necessary. What we're saying here is that as intercompany transactions are happening, as you are benchmarking, whatever comparables you're using that to determine the transfer price that you have there, you should be documenting them as things are going. So with that, you will not have problem with the tax authority. Our time is fast spent. There's something that we should have talked about also. It's called advanced pricing agreement. It's called APAs. So these are things that you do when you already have tax audit issue over time. So you enter into an agreement with the tax authority. It could be not only your tax authority, within both jurisdictions, wherein you have told them, let them know how these transactions happen from time to time, so that you have a particular way that you and the tax authority will agree on how to address that particular area. So on that note, I think I'll drop my pen so that we meet with the timing requirement. Thank you for listening, and thank you for affording me the opportunity to be able to make this presentation to you. I appreciate you all.
Thank you, thank you, thank you. I think all participants should please use your electronic clapping, and if you can unmute, just clap and give a round of applause to Dr. Yemi Sonny. He has really done justice to the topic. Thank you very much. Thank you. English participants, you have been Thank you. Okay, we are going to quickly move into the question and answer session. If you have questions on the session, while Dr. Yemi will drop his screen, so he will stop sharing so we can see those who have their questions. You can raise up your hand electronically if you have a question, while we also want you to put in the chat box. If you are shy, you can put your question in the chat box for us to pick the question. I think he has really done justice to the topic. He has had the overview of tax audit management. Please, no distraction, please. He has talked to us about how do we get started. He has talked about the basics of transfer pricing. He has looked at intra-group transfer.
Dr. Falcon, I muted all, so unmute yourself.
Okay. Why is the FIRS interested in deep TP audit? What are the things we should look at for in TP? Arm's length principle. What does it mean? What is local file, master file? Comparability factors, audit process, and how do we ensure that we don't fall into those penalties that he has discussed? I think he has really done justice. We can't say more than this. I can't even say more than this at this point. Within a space of less than an hour, taking us through this is real work. If you have questions, you can raise up your hand. We have limited time, and then we'll take those in the chat box. So I think I'll yield the floor first to Ojomo Abimbola Aduke. You can unmute yourself and ask your question. Abimbola Aduke. Ojomo Abimbola Aduke. I think while Ojomo Abimbola Aduke is trying to come up, I have a question in the chat box which I will take for Dr. Yemi to respond. Gladys, please stop disturbing us. The question says, there are two questions, and it's by Adetayo Omoloye. The first one says, why is it important for related companies to file TP returns with the FIR even when there are no control transactions between them? That's the first question. The second question is, what are the things to be considered in determining the TP method that is suitable for a group of companies? I know that Dr. Emi will be able to do justice to the first one easily, but the second one, let's see if we can just do a quick, short response for that also. Thank you.
Thank you, Dr. Titi. Let me take the second question first, then probably I'll tell you to repeat the first question. You know, when you're talking about the appropriate TP method for intercompany transactions between a group of companies, I can tell you that there is no appropriate method that can tell you that this is the appropriate method. Now, to get the appropriate method, there's a need to have to see what the intercompany transaction is, right? In knowing what the intercompany transaction is, then you have to perform functional analysis on the intercompany transaction, do comparability analysis on them, and once you do this, it is then that you will now be able to, you know, have an idea of the appropriate transfer pricing method to select. But, you know, over time on the rule of thumb, I can tell you for free that when you have transaction between subsidiaries and where there is probably an internal comparable that is available, sometimes the TP method that you use there tilts majorly towards the comparable uncontrolled price method. But for a lot of sales and distribution function, most often times you will use the resale price method for that. And where you have intercompany transaction that happens between two different subsidiaries, and each of them has unique value proposition. Subsidiary 1 has unique value proposition. Subsidiary 2 make unique and valuable contribution to the intercompany transaction. At that point in time, you know that COP method is not appropriate. You know that resale price is not appropriate. You know that cost plus price is not appropriate. Most often time, you want to use the transactional profit split method for that. So, and when you are talking about transaction between manufacturers and probably service providers, right? You most often time tends towards using cost plus method. But these are just guidelines. The determination of the appropriate TP method is based on the circumstance. You need to have the real intercompany transaction. When you look at the intercompany transaction, you perform analysis on it, and once you perform a functional analysis on that, then you'll be able to determine the appropriate transfer pricing method. Then Dr. Titi, please, can you let me have the first question? What's the first question?
Okay, the first question says, why is it important for related companies to file TP returns with the FIRS even when there are no control transactions between them?
Okay, that insinuation is not completely correct, and I'm going to let you know why. You know, there's a difference between tax returns, which is done annually, and TP returns. TP returns are not done manually, annually. Right. If you remember that one of the slides and one of the slides that I gave, when you do your first TP, when you do your first TP documentation requirement filing with FIRS. Now, when there are material changes in the return that you have done, then you need to do another return. But when there are no material changes, you know, when there are no material changes, so it's not like it's an annual process. But what happens is that in terms of the compliance, right, in terms of disclosure and all those things, of course, those ones are things that you cannot joke with when you have when you are requested to do them. So that's just that for that. Thank you,
thank you, Dr. Yemi. I can see Tony Silva before we go to the chat room again. Tony Silva, you can unmute yourself to ask your question. Tony Silva. Can you go ahead with your question? Tony Silva, go ahead with your question. Okay, if he's not coming on, let me take another question from the chat room. Another question from Lawa Rashidat says, how do we determine what transfer pricing method the company is expected to use? I think you responded to this in your last response.
Yes, I've already responded to that. There's no one size fits all. You know that, oh, when this happens, no. We need to understand. You know, you need to bring out the transaction fully. What happened? Who did what? Who performed what function? Who used what asset? Who carries what risk? We need to do that. When you do that, it's from there that we'll be able to now know what appropriate transfer pricing method. You can have intercompany transaction, the same transaction between two entities, and there will be different functional analysis on them, and different transfer pricing method will apply, you know, to them.
Okay, thank you, Dr. Yemi. There's another question here that says, in the context of TP audits, is there a difference between TP and overpricing by MNEs? This is by Olufemi George. Is there a difference between transfer pricing and over invoicing by multinational enterprises? When you're in the context of the TP audit? You
know, when you are talking about TP, right? TP can either be over or under invoicing. It's a function of how does it make them to shift profits. Now, look at the example that I gave, the illustration I gave. The first illustration, we use $15,000. And when we use $15,000, the next illustration, when we use $11,000, right? When we use $11,000, it brought down the tax exposure of the group company and it increased the group profits. So it depends on who is doing what. That is when you know, oh, okay, which is which. But the TP is not a function of under or over. It can be either way. You understand? Depending on where you are moving things from. Are you moving it from this place to that place? You know, who is where? You know, is it the parent company that is at the low tax jurisdiction, or is it the other company that is there? So that is what that is all about.
Thank you for that answer, Dr. Yemi. There's another question here from Adedo Kujola Yemi. He says, who actually initiates TP audit process? I know you mentioned this, but you can just clarify that. Who actually initiates TP audit process?
No, the TP audit process is actually initiated by the tax authority. And it happens when a TP risk assessment is carried out on the company. You understand? Once it's carried out on the company and is flagged, that is what leads to the TP audit process.
Okay, thank you for that. There's another question here from Biodun Ogunbiyi Davis. She says, I got you saying, doctor, that files should be gotten ready and filed with relevant authorities only when requested. I want to relate this to why then there are penalties since I'm to file when requested by the tax authorities. I think you need to just clarify.
There's a difference between compliance requirement and returns. Now, in terms of compliance requirement, okay, let me give you an example. Now, I have a client who recently was acquired by another entity, and by virtue of being acquired by another entity in another jurisdiction, right? There is a need, even though there's no intercompany transaction, there's no control transaction, but there's a need to notify FIRS in a prescribed form in line with the TP law. So if you fail to do that, just a form, just to fill the form and send to FIRS, then you're okay. But when you fail to fill that form within the time frame, then penalty applies. It's different from filing TP returns. They're two different things. It's a compliance issue and there's a return issue.
Okay, thank you. The next question is from.
I meant disclosure. Sorry, not compliance. The word I wanted to use was not compliance. Disclosure. Sorry, disclosure.
Okay,
you know, it's disclosure, not compliance.
Thank you very much. The next question is for membership number 031-828-822, no name. Does TP apply to interboundary transactions only? Simply put, when a parent company and a subsidiaries are domiciled in the same country, does TP apply?
You know, that thing that you're talking about, you know, unfortunately, I didn't mention it because of time, is what is called domestic transfer pricing. Domestic TP can apply to domestic transfer pricing. Now, let me explain to you. Now, imagine that you have a parent company who is in a free trade zone, right? And you have a subsidiary who is in outside the free trade zone. So with TP, you can manipulate profit. I have seen some companies try to do that. So that's domestic transfer pricing, and it is possible.
Okay. Another question from Kikelomo Adioshun. For companies that are not related by either subsidiary but have certain offshore transactions, are they affected by TP audits?
When it comes to, if you look at the structure that I gave initially, when we talk about a connection, there's something that's called connecting factors. Connecting factors could be by virtue of the fact that I have ownership of 50%, or by virtue of the fact that, you know, I control the management of that particular entity. If there's a control of the management of that entity, it comes into that league that, oh yes, it's an associated enterprise, right? Once it's an associated enterprise, as defined by Article 9 of the OECD, then whatever rule on TP relates to subsidiaries and parent company will relate to them.
Thank you. Another question from Sukomi. Do you think TP penalties are too high?
The word there is penalty. And they call it penalty because it is defined as penalty because it's only applicable when you do not do the right thing. So even if they put the amount is times 100, it does not matter if we as taxpayers, professionals, we advise our taxpayers, our clients, to do the right thing at the right time. So that penalty will not even be an issue. It won't be something that matters to any one of us.
Okay, he now has further clarification that he needs, the same person, that are the penalties in the TP Regulation 2018 applicable to periods before 2018? I know I can answer that for you, but I'll allow you to answer it. Are the penalties related to periods before 2018?
No, they are not applicable. Even the amendment to the TP Regulation 2018, we said we had that of 2012. Things that happened then is assumed to happen from the time the new regulation started. And that was why they were given a time frame to make all their TP returns. And it will be deemed as if they all started at that time when the law started. So you can't be having a backdating the effect of a regulation that you just brought on board.
Okay, I'll take this last one. I know somebody was trying to clarify again that if ownership structure of a company is only owned, does TP still apply? I think I'll just say yes to that to save Dr. Yemi the additional stress. The last question I have here says, thank you, doctor. Did I hear you say that CBCR is not to be prepared or filed by the subsidiary of the parent company? Please clarify. This by Toyin or Dedeyi. Who prepares and files CBC? I just want clarification on that. Parent or subsidiary?
Is this parent company that prepares it. And because when the parent company prepares it, don't forget there's an exchange of information agreement. So different jurisdiction can actually have access to this report.
I think I'll just add to say that the CBC and the parent can actually also nominate a surrogate parent to do that on their behalf. Just to add to what Dr. Yemi has said, it is a parent affair. I don't think we have anyone raising hand for questions again. And I think we've exhausted the question in the chat room. In the absence of any other question, I think I want to say a very big thank you to Dr. Yemi for taking our time to be with us as I hand over to the chairman to take this forward from now. Thank you. Mr. Chairman, I've delivered. Over to you, sir.
Okay, well, I really do not have anything to say about Yemi Sonny. I think I've trained him enough. You know what to do. The only thing I want to take from him is this white headphone with him. Well, let's give honor to whom the honor is due. I think some of us that are just coming up as a professional accountant, we should allow those in council to talk to themselves. It's on this note I want to call his brother, who is also his colleague in council, my own chairman, to just say something about this and help us appreciate his own brother, the way they will have done it on the level of council. Oga Omidiji, over to you, sir.
Okay, thank you very much, Chairman. Right from the flyers, everybody knew that something important was going to happen, from the topic down to the facilitator. So, and I'm very sure that our audience, members and friends have not been disappointed. Of course, for someone to be wearing double cap at both ends of the device, definitely there must be stuff that is made up of. Can you mute? Okay. So on behalf of the chairman and the entire membership of Ilupeju Bagaradi Society, the Model District, I'd like to say a very big thank you to you, Dr. Yemi Sani, my friend and brother, for honoring our invitation to share your knowledge with all of us. I'm very sure that lots of us have been now better informed on transfer pricing. And I'm also sure that the materials used will be made available to members. And any further questions can also be directed to the facilitator, and I'm very sure responses will be given accordingly. So on this note, I want to say a very big thank you to you for being our guest speaker today. And to all our members and guests, I want to say a very big thank you for honoring our invitation and being here to receive some further knowledge. Thank you very much. Good evening and happy Sunday.
Thank you very much.
Sir. Technical Secretary, do you have any electronic gifts to this doctor? Please, there's no cash, no cash for anybody.
Yeah, so apologies. We shall send the electronic gift. Dr. Yemi Sonny, we have a gift for you. Apologies, we should have shown you what it looks like, but we shall communicate.
Thank you.
Yeah,
thank you very much. I really appreciate it. Thank you very much. I really appreciate
Dr. Yemi Sonny, we are looking for your application form to join our district. Bye-bye. The single ladies and gentlemen, that was the lecture, and that was our chairman appreciating his own brother at the level of council. And we want to say thank you to every one of you. I'm projecting a particular thing I want you all to see because of those that are joining us. Come Thursday, 15th of December, we shall be having our Forum of Fame. These are the topic highlighted for the day. You may wish to be part of it. Flyers will be out. It's been out. We record it because of some changes that we've made. As we get approval from some speakers, we had more. So please make it a day. Just note that this program is coming up. If you do not get the details, you may wish to contact any of our members. Thank you so much. Would a member kindly move motion that we should bring this meeting to a close at this appropriate time so that we can be out of this meeting now?
Good evening, my powerful chairman, sir.
Good evening.
My name is Ismail Washim Sulaiman, MB0356. Motion for the adjournment of this meeting till the next meeting. Thank you.
Any seconder, please.
Hi, Olufemi George, membership number 029093. Do support the motion to adjourn the meeting. Thank you.
Okay, if you have been blessed with everything we have done and you feel like donating to the purse of our technical activities, just go to the chat box, put your name, and no amount is small. If you want to just bless us as usual. Some people, they are constant donator. So if I didn't see their name, I know how to get them from their house, various homes. Thank you as you do that. We don't force you, but we want you to be part of our moving trail. The date of the next meeting will be discussed and we'll send it out. Because if you look at December 25 should be our next meeting, but we want you to enjoy your Christmas. So the committee, ESCO will be coming to us to inform of appropriate time we will be meeting for December meeting. And don't forget that we penciled down January 22nd for our retreat. You will see more of our people and they will come on board. Please pencil that particular date and you'll be glad you have done that. Please go to the chat box to just drop your notes, put your name and the amount you are trying to donate for this program. ADBC, thank you for the 5,000. I will not send the slide though. Donate first. So thank you so much. While you are putting down your donation, Eze, thank you so much. Uchena, I think I should just give 2-3 minutes for this before I request for prayer. Okay, Folashade Osho, God bless you. Folashade, Zainab, we bless God for your life. Okay, I'm waiting for some people to pray for. Some of us are pastor. Fumi, thank you so much. You will not lack anything that you want in your life. Okay, whoever dropped now, the prayer is also for Ledia Martins. God bless you. Ledia, thank you for that 10K. Sukomi, 5K, thank you. Ako, Odusanya, thank you so much. God bless you. Olaniyi, Festus, Ajaguna, thank you so much. 10,000 naira. I hope you are not reducing that zero. 10,000 naira. Okay, you know you cannot delete anything you have typed. You can only add to it. Thank you so much. This is a lot. Financial Guru, can you just estimate and let's announce so that they will know that members of our district have blessed the district with their donation today. First off, thank you so much. Olaniyi, thank you so much. Saidiat Ibrahim, thank you. I pray for you. You'll be able to donate more than that next time. You today, 5K. Don't worry. The financial secretary will send the account number now. Financial secretary, please send the account. Olufemi is dropping.
Please post the account number now, please.
Olufemi, thank you for the 25K. I hope the 5K on top is for my talking, Abi. If it is not, please add another 5K. IPC, this is your work. Oh, I know Sabi do well. Oh. You will just help me pray for all of them later before we go. Thank you so much. I don't want to disturb us, but I want you to just finish drop what you want to drop. Some people are already running away. Because of this, don't run away. You still need closing prayer. Okay, thank you so much. IPC, can you just help me just say a word to the life of these people that have donated? It's not easy to donate at this period of time. Oh, okay. Olufemi is saying I should take my talking allowance from Obidiji. Okay, Obidiji, you have heard also.
Both of you are your own. Both the writer and the referencer. Anyway, thank you very much, Mr. Chairman. And I pray that all those that have donated in the course of this meeting, the Lord will replenish your purse. Those who are willing and I know will still donate even after this meeting, I pray that God will bless you. Those who are still thinking whether to donate or not to donate, I pray that God will touch your heart. Amen. And to every one of us that have been here, I proclaim the blessings of the Almighty God upon us all. Amen.
Amen. Thank you.
Thank you. So closing prayer. Someone that is blessed today should just pray for us. Is Yaya Tuko there? Yaya Tuko, are you there? Are you there or you have run away?
Hello.
Go ahead, sir.
Oh, okay, sir. Can you hear me?
Yes, sir.
Okay. أعوذ بالله من الشيطان الرجيم بسم الله الرحمن الرحيم العالمين الرحمن الرحيم مالك يوم الدين إياك نعبد وإياك نستعين اهدنا الصراط المستقيم صراط الذين أنعمت عليهم غير المغضوب عليهم ولا الضالين آمين.
Thank you so much. Can you tell us your name? Are you a member of our district?
I am a member of Sokoto and District Society.
Okay, so you are a diaspora member. Thank you so much. We just give us your membership number. We don't have problem with that.
No, I have a chat box. I put it there, sir.
Okay. Thank you so much.
Thank you very much, sir.
Thank you so much, distinguished ladies and gentlemen. It's been a wonderful time. We actually hope to conclude this meeting by 15 minutes after 6, but this is just 5:30. Thank you so much, and we can now start going to our various houses if the secretary is not giving us national anthem.
Secretary,
please, I'm still receiving donation. No.
Let's do.
I'm still receiving donation. No.
Ogabe. Alpha.
We can actually go. There's no problem. Ogumbi Davis, thank you for the 10K. Thank you that you are not taking our money go home.
Chairman, maybe you stop sharing for Abe.
You know what to do now. You actually know what to do.
Chairman, Mr. Tajuddin Olayinka 20K.
Council member is online, oh, Tajuddin.
I've been looking for him now. Ogataju, thank you so much for this. Oh, you did not add 5,000 for my talking allowance on top, but we appreciate you. Thank you so much for being here, sir. I was trying to look for all the names, but I couldn't get it that time. So sorry about that. Okay, so we can allow our member to go. The
account number already posted, please.
Okay. Be posting it until we are out of this place, sir. Repost.
Look.
Lord, I can found of treasure in triumph of an array, standing strong in harmony, building our land together, dreams of a founding fathers, we are striving to attain. Through all ages be sustained. Institute of Chartered Accountants of Nigeria. Noble I can, noble I can, your accuracy we cherish, we uphold your integrity.
Thank you. Bye-bye.
Prof.
Bye, everyone.
Thank you. Thank you.
Hi,
Call my
Professor.
name, oh. Don't just call my name.
Bye.
Bye-bye.
Prof.
Bye.
Don't call me. You went to Global Accounting Body. I did not see you for one day.
Hello, sir.
And
Hello,
now?
sir.
And we snap
Yes,
together.
now.
And we snap together.
Is she snapping now, Sonny?
Hey. Hey.
Prof,
Oh.
Mommy Abila, thank you very much.
Titi Lion.
Thank you, Mommy, for coming online. Thank you, ma.
Thank you. Sorry,
Bye-bye.
during that I lost concentration.
Bye-bye.
Thank you, ma.
Thank you.
Mention your name.
My name is Adeke Maswed.
It is
Thank
well.
you.
Thank you.
Thank you.
Prof, Doctor, ẹ kú iṣẹ́.
Pípí Adédoyin ó dá báyìí ẹ̀yin lọ India ìgbàgbé àwa. Okay, kò sí wàhálà.
Ẹ fi wọ́n lẹ̀, àǹtí ẹ fi wọ́n lẹ̀, a máa ṣe kí wọ́n fún wọn.
Ẹ má worry, a máa ṣe kù fún yín.
Ẹ̀ṣẹ̀ bẹ́yìí ni organizer.
Ọmọ bá mi rèmi sọ̀rọ̀ yẹn. A ṣe kù.
Bẹ́yìí ni organizer ní tẹ̀lé mi.
Ẹ jẹ́ kó mọ̀, ẹ jẹ́ kó mọ̀.
Ọmọ bá mi rèmi.
Ẹ jẹ́ ká gbọ́rọ̀, ẹ má gbé Jẹ̀bú níbi, ẹ jẹ́ ká gbọ́ra wa o.
Ẹ̀rù bẹ́ẹ̀ ni.
Ẹ má gbé Jẹ̀bú débi o.
Ìjẹ̀bú rẹ̀ wà.
Ó kú 5 minutes, àbí 55 minutes bàbá. Ẹ má gbé Jẹ̀bú débi o.
Ìjẹ̀bú rẹ̀ wà. Ìjẹ̀bú ni mí o. Ìjẹ̀bú.
No problem. We are the Ìjẹ̀bú.
A máa sọ̀rọ̀ lẹ́yìn ìsìn.
Kò sí wàhálà. Àpàdé àkọ́kọ́ sọ̀rọ̀ ní o, àpàdé lẹ́yìn ìsìn o.
Ní a máa sọ̀rọ̀, a tún máa pàdé lẹ́yìn ìsìn.
Ọ̀gá mi bá báyìí o, happy fine.
Ọ̀gá mi mo ń bọ̀ ní tax office o.
Ẹ máa bọ̀. Ẹ máa kó TP return sí bọ̀, TP return sí yẹn máa kó bọ̀.
Kómùkàn wá o.
Kí ló kọ́ mi pẹ̀lú TP?
Àwọn client yóò ní transfer pricing issue ni.
Ní kí ìsání ni tax promax. Shivabe, kí ìsání ni tax promax issue.
Ọ̀gá bẹ ẹ wo tax promax ẹ fún wa credit wa o. All our credit give us o. We told him tax credit on promax.
Àǹtí credit wo ni ẹ? Màá pè yín lẹ́yìn ilé
ìta. Credit gbogbo company ni. Promax credit fún wa pé o. Ẹ ń sọ pé ẹ sọ story. Ẹ má jẹ àjà o.
Ẹ jọ ẹ help wa. Tax promax issue yìí compound interest yìí.
Ìyá
Àbújá nìyẹn. Wọ́n máa remove ẹ̀, má wọrí.
Àbújá nìyẹn Ọ̀yọ́ lẹ́wà. Ẹ̀yin náà yé default. Ẹ̀yin náà yé default mọ́.
It is well o. Ọlọ́run wà lọ́wọ́. Àwọn client yẹn ti fẹ́ pààyàn báyìí o.
Ẹni kọ́ máa default, ẹ̀yin náà guide dáadáa.
Tosin.
Tosin, àwọn make sure pé wọ́n file at the right time.
Dikinropo and Tosin.
Yes, so ṣó sí.
Ẹ jọ̀ọ́, ó yẹ káwọn èèyàn register fún program yìí o.
Send notice o.
Registration link yẹ kó wà. Ẹ bá Dr. Abe sọ̀rọ̀ pé registration link wà kó tó di pa máa fi this issue of ID house. There should be registration link.
Okay, I'm a creator.
Taloma Bashi, is Oga Tosin there?
Tosin is aware, he will do it.
Abe my handle.
Ole Mbolo Salo. Abe my handle.
Okay.
Oh yes, so send it so that we can send it to Tarlac to work on it sometime.
You can register the Zoom. Immediately you register the automatically
you get the link. You get the link after registration. So registration before attendance.
So will you go and set that thing to have you register before?
Okay, I should be able to do it.
I'm all set here so that we do it. When we do it, we send the link out. So they will now register, they will get the link.
Okay, so what do we put on the flyers?
It's still the same link we have. If we are putting the number on the flyer, it means we are giving them the code and the number. But if
no, we just send them the link to register now.
Okay, the link to register.
Yes, yes. Okay. Now they have the link to register. After registration, they will get the link for the seminar. Since you know some are paying, some are not paying.
We're actually not collecting money, Gary. We are not collecting money.
We do that, sir.
Let the registration link be on the flyer. Please.
Please, well, I'm waiting for that link so that Tala can do all this thing.
I'm changing.
Okay, sir.
Chairman,
Baba Gboworin, go and sit down. Go and sit down, Baba Gboworin. Eti tingle lórí owó. ẹ bá ti
ẹ
gbowó
bá
bẹ́ẹ̀ sí
gbowó
ní
tẹ rí yan 20 kí wá ní benefit ẹ.
ẹ jẹ́ ká yọ kúrò jẹ́ ẹ jẹ́ ká sọ pé free for everybody.
Fi síbẹ̀
ẹ
already,
má
ẹ má
worry.
worry.
Let's leave
Fi
this till
síbẹ̀.
tomorrow. Bye bye.
Ẹ má worry sẹ́, a máa
Ọ̀gá
yọ
Rọ́pò,
kúrò.
go and sit down, don't worry.
I'm
Ẹ
sitting
like owó
already.
jù.
Already seated.
Thank you, bye bye. Oga, be end this meeting. We are finished meeting, Jare.
Kí ló dé
We are finished meeting. Ẹ jẹ́ àlọ́lé.
Okay, sir.
Dr. Soji Adedokun láti Ìbàdàn, ẹ pẹ̀lẹ́ sà o. Dr. Soji Adedokun, thank you for joining us.
My IPC, has it gone? I will private chat you in private custody.
Why now?
Prof, how are you, sir?
Yes, sir. Ẹ pẹ̀lẹ́ sà.
Dominic, how are you, sir?
I'm fine, no.
How are you, man?
Don't mind them. They are jealous. They are jealous. I say I want to private chat you in the private.
We appreciate
I
you.
want my PC. I
Yes,
want to
sir.
stay in his room.
Yes, sir.
He didn't give me address.
I didn't know you. I didn't hear you. Goodbye, everybody. Ẹ má dà lò. Ó dé Nàìjíríà wá ń sọ̀rọ̀ kó sọ̀rọ̀ ní Mumbai. Ó dàbọ̀.
We share. Lucky.
Okay, hold on.
Ẹ tó ní ilé ìkópalẹ̀ nínú ilé ẹ̀ mọ́ o.
You are in charge, you are the host, Prof.
Dikin Rọ́pò. Please call Madam Titilayo. She will give you letterhead and signature. Quickly send letter to these people. They've been chatting me that they need their date and time. Please send it tonight. Send those letters tonight and copy me.
Okay.
And it's better you use WhatsApp. They are already chatting me that they want to know their exact time.
No problem.
So you understand? Please.
No problem.
Dr. Titi will forward it to you, and please do the letter, and if you have your scan signature, use. Otherwise, use my own and that of Ogabe. And you may wish to beg Auntie Titi if she is available.
Okay.
Please, please, please. They've been chatting me individually that they want to know details of the time and the likes, please. Some people decide not to leave this platform. They think we want to share money. Okay. I will just end the meeting for everybody now.
Prof.
Yeah, yes.
Okay. Oh, yeah, close the meeting.
So sister, can go. Prof. Okay,
thank God, your own is next year. By the time I start disturbing you too, I'm on.
But when Emily Timashe Fulati May Lotima take over. May 1. Lotima take over.
Thank you, Prof. Thank you, Prof.
I
will have a single question now. My visit will turn into something else for me.
You have been increasing Prof. Now, Prof.
May 1 no ma take over, but she won't go to anything. 13 months, no ma lori 13 months. Oh God.
Okay.
That man go to anything.
Okay. Abio.
Thank God, I will have to, but then I will have 2 IPC.
The original IPC will have been so busy with the council of ICANN. He's using this year to watch out what is going on.
Time here election. So, Ojumadi.
By next year, immediately we have very much of higher responsibility.
Okay.
Oh yeah, my lord, you daro.
Daro, meeting.